All right. Hello, everyone. Welcome to TradeView, a nearly end of year episode. We're going to have one more in 2 weeks. So, our second to last episode of the entire year. I'm your host, Ben Tracy. I lead strategic business development at Vizion, joined here by my co host, Kyle, our CEO and co founder. Kyle, we're here nearing the holiday season, I guess, in the holiday season with Thanksgiving last week. And yet still there's no slowing down. So I think our audience and our listeners, they want to hear what's happened in the last 2 weeks. But before we do that, we might have some new folks in here that are like, what is TradeView? What is TradeView Live? So why don't we start with our disclaimers and explain a little bit about what we're here to discuss.
Yeah, the warm-up details. So
Sure.
TradeView is a product offering from Vizion. It's the industry-leading trade intelligence platform. We have more coverage into containerized freight movements and shipments than any other platform out there, 3 times more than others, we'd like to say. And we also are forward-looking, so we give 90-day trade forecasts for all of the profiled companies, profiled products, profiled locations, etc. This also allows us to map the supplier and product networks, the value chains for different products, et cetera. And then we built an AI researcher capabilities to the platform. So TradeView drives all of the data behind this presentation, and hence the name TradeView Live.
And what is this data? Where does it come from? How do we acquire so much of this global coverage of container shipping?
Yeah, so this data from more than 270 different sources we built connections to over the past 5 years. Carriers, port terminals, customs departments, vessel tracking, etc. So there's a whole host of booking platforms for data, a whole host of different data about containerized freight coming into the system. And I mentioned forward looking a moment ago. So like, how can you forecast the future? Well, one of the great data sets that comes into TradeView is ocean booking data. We see nearly half of all the ocean bookings made worldwide every single day. And we're able to then understand what is likely going to be arriving where in the world for 8, 12 weeks into the future, because those are kind of the transit window times for ocean freight.
Yeah.
That's how we can see the future with so much confidence, where, we'll get it to you shortly, but our trade forecast for like US TU arrivals is typically in the 90th percentile somewhere of accuracy.
Exactly. So hope that helps for any new folks that are joining. Welcome. Hope we can provide some useful insights. This episode, we don't have a special guest, but we do have an important topic, which is what's happened in this entire year. We'll get to some larger historical comparisons and context that we want to give on what 2025 means in the bigger picture in terms of the last few years of shipping trends, and some highlights that we want to bring out for what countries, what industries that we think are most important to call out in terms of their changes in shipping trends for 2025. So this episode is more of a recap, highlights, what are significant this year. In 2 weeks, we'll actually start looking into 2026, and we'll have a special guest to discuss what is to come. What do we think will happen next year, and start putting together some of our predictions. Before we do that, we have a quick review on what's happened in the last few weeks in terms of global shipping activity. Again, when we look at this is a forward-looking indicator. This is when the shipments were booked, meaning they likely will not arrive for another 30 to 90 days. So that leading indicator of shipping demand from a global perspective for U.S. imports, and specifically for a key trade relationship that has gone through a lot up and down in 2025, are imports from China. So let's start with global bookings. Kyle, it looks like things have continued on their somewhat normal path.
Yeah, so quieter this week of November 24th. So 0% year-over-year change, a small week-over-week change, but only a small week-over-week change. So on a global level, freight volumes look to be normal.
and relatively flat. I mean, I don't think we're seeing much of an increase, maybe a few percentage points. And going back all the way to October, we did see a double-digit increase in that week in comparison to the year before. But that started to taper off, and most recently, actually, a 0% year-over-year change. So we really are starting to flatten out to end the year here for global shipping demand. On the other hand, that second visual below, U.S. imports continues to drop in comparison to the year before. Things were looking relatively flat just week over week. But as we saw, as November progressed into the Thanksgiving week, our year-over-year change again dipped into the double-digit year-over-year percentage drop, which aligns with the forecast we were putting out for U.S. imports to reflect a 16% drop in the month of December for all containers arriving into the U.S. in comparison to December from last year. So it looks like that trend is continuing.
Yeah, definitely down year over year. I think there's one small asterisk / caveat. If you go back a year ago, we also did see kind of an uptick following the presidential election where front loading was starting to happen quite a bit. So just something to kind of take into account when you look at year over year. But even week over week, we're down, 2.7%, then 4%.
And I think that, yeah, if we look at how that might continue through the month of December, especially because, yeah, not only after the presidential election, but towards the end of December last year, we saw an additional bump ahead of the Chinese New Year.
Yeah.
So bookings that were placed that needed to arrive by early to mid-February. The Chinese New Year is a little bit later now.
Yeah, second half of February this year.
Exactly. So we might even see that additional bump delay all the way into January, which would mean that December might look even more significant in terms of year-over-year drop, as we're seeing it already begin to happen right now, going into negative 14% year-on-year change.
But even taking all that to account and looking at the China and U.S. bookings down 35% roughly year over year, that's pretty meaningful decrease, even when you take into the kind of the front loading that was happening last year, both just front loading and pre-Chinese New Year. 35% is very meaningful, far more
than we've seen it. I mean, as you can see, it's one of the higher figures year-over-year drop for the China to U.S. relationship that we've seen even going back to October. And we'll look at this over a larger span of the last 2 years. China to U.S. freight is really at a low that we've not seen for quite some time.
And we'll talk about this in the coming slides because the goods that were heading to the U.S. have gone elsewhere now. And we'll talk a bit about where else they're going.
And again, keep in mind, China's the trade relationship that there have been a lot of positive headlines about, a lot of progress and agreements that have been put in place for exceptions we're making on cargo coming from China, China sort of unblocking its exports of precious metals and committing to importing more from the U.S. And so with all that being said, we still aren't seeing that that trade relationship, at least for our imports from China, we haven't seen that start to go up yet.
Now, looking at those global bookings year over year line graph style, you can see 2025 is about that same spot where we were in 2024, a little elevated over 2023. But globally speaking, nothing seems abnormal.
Yep. Everything's following, I think, a mostly normal pattern, although I think what's important to note here is that overall, 2025 followed a very similar pattern to 2024. Some instances where we were below last year's level, but for the most part, at least for the last 2.5 months, we've been a little bit above 2024 in global bookings. Now, as you can see, just recently, like we just called out on the last slide, that reached an equal parity to last year. So we're now at that 0% year-on-year change. That's what we want to watch for. Is in 2024 we saw global bookings start to teeter upwards. We're actually on a downward slope right now in 2025. So are we going to start to see that threshold cross where we might actually see a decline in global shipping activity in comparison to last year? But overall, we're still well above 2023 levels. Now, for U.S. imports, we see quite a dramatic story in 2025, right? That initial front loading where we were well above.
Oh, excuse me. There we go.
We were well above 2024 levels for the first part of the year. That dramatic crash following Liberation Day tariffs that were announced the spike back up, which was mainly due to a lot of temporary truces and agreements put in place, most notably with China. But since then, so really since, what would that be, the second week of May, we have been dropping. We've been crashing. And U.S. imports are well below 2024 levels as they've been, but we are still below, maybe right at about 2023 levels. It's something that we were watching earlier in the summertime when we were below 2023 levels. That's when we kind of called out, I think that's roughly week 29, that, hey, we're seeing levels we've not seen before in 2 years. We've kind of caught back up to 2023, but we've certainly not exceeded it, at least for consistent weeks. So overall, when you look at the entire year in view, it's certainly above 2023. But when we look at post April 1st, and especially post like week 29, roughly, looking at the middle of the summer there, we are looking at levels very similar to 2023 and actually not much above them.
Now, this is where the story gets a little interesting. So, following that same pattern of Liberation Day, truce temporarily bumping up in May, and then that decline. Again, this is China to US bookings. That decline looked like it was leveling out. We had another big drop during the kind of October China US port fees and fines friction. But now it appears that, the usual trend where at the end of the year, you do have a dip and then it starts climbing again at the end. 2024 is relatively level. This is a different pattern we're seeing emerge.
Very different. We are well below levels that we've seen in the last 2 years. That's been the case going back to week 25, when you see that blue line go below the green line for 2023. There's no return in sight to either catch up to 2023 levels, and certainly not anywhere close to where we were a year ago with all that front loading. It's continuing to widen the gap between 2025, the year we're in now, and then 2023. Again, 2024 is an outlier, but when we look at a more normal year, quote unquote, of 2023, we're well below even those levels. So what is the new normal for our imports from China? We haven't reached that bottom yet. And I think we need some more time to kind of see where that relationship looks like. I think if I were to speculate here, Kyle, the upcoming decision from the Supreme Court, the fact that there isn't one yet might be an explanation for why the bookings from China have not yet resumed.
Wait and see.
Wait and see if we're going to get refunds on our previously tariffs. Is there some sort of retroactive ruling put in place like we did for our imports on South Korea? Or if in fact the tariffs are approved in a sense from the Supreme Court ruling, that might mean we plummet even further. So it's still a wait and see for imports from China, which would explain why we're still seeing such low volumes.
Well, now on to our special topic, 2025 recap. And so we'll start off by comparing 2024 to 2025 U.S. imports. Right now, we're seeing nearly a 6% year-over-year decrease between the two. So pretty meaningful decrease.
And most of that is based on what's happened since April 1st. Obviously, we were well above 2024 for the first 4 months, 5 months of the year, give or take. We kept reporting record numbers of freight arriving into U.S. ports, into LA, into Long Beach, into East Coast ports like Savannah. Hey, we're seeing volumes we've never seen before. Obviously, that story's over. We're now seeing what the Port of LA themselves reported a 16% year-over-year drop for December. That aligns with our forecast we're putting out. We put out a couple of weeks ago for the month of December. So it all balances out because we had that front loading continue in the first 4 months of the year. We're not seeing a dramatic year-over-year drop, but still almost 6% decrease. Now, when we compare that, for example, to 2023, we're still above 2023 volumes for the entire year. And then the other comment I wanted to make is globally, all freight for 2025 going to all countries in comparison to 2024, we are up 3.1%. So just totaling up those lines you see there, we don't have that number called out.
Not surprising. Global growth is 3%.
Yeah, global growth. When we look at GDP numbers, a couple of percentage points, it just shows that U.S. imports clearly have an impact on global trade and container shipping industry worldwide, but imports are up in many other regions and some individual countries, which we'll call out a bit later. This looks at specifically that growth, that 3.5 to 4.2% for all global shipments. Looking at the month of August as actually the peak for the year, and this is all containers arriving to all countries.
So what actually happened in 2025? So I mentioned this earlier in the slides. Front loading started at the end of 2024, continued into 2025. So a lot of U.S. importers trying to get those shipments in before tariffs took effect, or concerns around what the administration was going to do may have taken effect ahead of even trying, the inauguration day. We were seeing a lot of companies try to get their arrivals in. There is certainly the China pivot. So exporters successfully shifted volumes of goods away from the U.S. and instead to Europe, Africa, and the Asian markets. Demand was strong for those markets as well. I mean, there were certainly incentives provided to absorb this production, absorb this inventory, but Europe and Asian consumer demand proved stronger than expected in seeing the shift of those volumes. Additionally, e-commerce, still continues to grow, 5 to 8% annual expansion, parcel/container demand to support e-commerce businesses. And there was inventory restocking. So cautious in 2024, companies rebuilt the safety stocks this year. And part of that was the front loading as well. But these are kind of the main trends and happenings we saw across 2025.
Yeah, and I want to call out specifically the China's ability to pivot its export. I think there's some commentary there about the amount of leverage that the U.S. thinks it had on its trade relationship with China might in fact not be as much as we thought. Meaning that China's able to find alternative places to export their goods, such as Europe. We're going to call out a few countries in Africa that actually have dramatically increased their imports from China. So overall, yes, China's exports are down year on year, but we've seen a huge surge that has not tapered off when we talk about China's exports to Europe and these other regions. I'm curious sort of who else that might be affecting. So when we think about the fact that China might be exporting more textiles, for example, I was talking to a textiles company just recently out of India. And what they found is that they don't normally compete with China textiles in certain markets, but after April 1st now, China's exports have flooded that industry. They have flooded the market. They have caused these exports out of India that normally don't have that competition suddenly now to have to respond. And so that's another question of maybe looking forward into 2026, when we see now that China has begun to pivot its export strategy, what are other countries' response to that? What are products and industries that, similar to textiles, are now going to be flooded by additional Chinese exports not normally seen before?
And one last comment, over a number of editorials in the past few weeks, The Economist has been asking this question about, the U.S.-China trade war, who's winning, and repeatedly editors at The Economist are saying, hey, China's actually winning it because the U.S. has been getting hurt more by the trade war than China, because China was able to pivot and find markets for these products, et cetera. Yep. So from a perspective of who's exercising leverage and is standing with better footing, a valued analyst like The Economist has identified China as having the upper hand right now.
Yeah, always a great publication to be able to read.
Now, for growth leaders looking at different regions, we saw quite a bit of change year over year, especially the when you look at this as from a CAGR perspective. So, top export growth, we're seeing quite a bit happening with Nigeria. So a lot of oil, gas, infrastructure were driving those Nigerian growth elements. Togo, smaller market, so not a big change, can be a big percentage change, but it is a transshipment hub as well, and a growing, meaningful transshipment hub for Africa. Then we start getting into a bit more Southeast Asia, Cambodia, Philippines, but each of these we saw as big beneficiaries of needing to soak up some of the demand that had been taking place on China, needing to be in other markets now.
Yeah, I want to call out India, especially
Yeah.
seeing them on both sides of this slide, both export growth and even more import growth. Obviously, that indicates maybe a widening trade imbalance. India is going to be importing more, or at least its import growth is increasing at a faster rate than its export growth. And as an economy that large with an impact on container shipping that's comparable to China, that's one to take note of. Many of these are relatively small when we think about Tanzania or Philippines. It's interesting, but in the grand scheme of things, in terms of their footprint on global container shipping, relatively small, but India definitely a large one. I saw a question that just got asked here.
That's Brian.
I didn't know it got popped up on the slide too.
That's a new feature for us.
New feature. Yeah. Thank you, LinkedIn. The question is, do you have any data indicating that Chinese exports to Canada and Mexico have increased? Curious if any of the China to US volume is coming through these ports or markets instead.
So we were talking about this a few TradeView lives ago. One of the things I'm recalling, and we could pull up the fresh data as well. Maybe Ben, you want to fire up TradeView on the side and do a quick data explorer for that topic. We were actually seeing a slight decline in Mexico, if my memory serves me correctly.
Overall imports into Mexico were down, but I don't know in particular with China. That's what I'm looking up.
Now, that's an interesting question. I think a lot of what we've been hearing more so is that this has been playing out more in Southeast Asia than it has been playing out for Mexico and Canada. Mm-hmm. Where you're seeing a major, say, like for Vietnam, for example. Vietnam is now the largest exporter of garments to the United States in the world. They have surpassed China. What has changed, though, is the imports of polyester threads, fabrics from China to Vietnam has greatly increased. But then the increase in finished products from Vietnam to the United States has also increased. So this is that rejiggering of supply chains that has played out. Now, I think Ben's working on getting you a live answer for that question.
So yes, year to date, or sorry, for the last 12 months trailing, so this would include some of December of last year, imports from China are at 1.29 million TEU for what we've identified in terms of shipments that have arrived, shipments that have finished.
To where?
From China to Mexico, sorry.
Okay.
In comparison to the previous 12 months, that was 1.44 million. So it is down, down roughly
200,000 some odd TEUs.
Yeah, down about 10%. In comparison.
Switch that to Canada real quick and see.
Yeah, let me do that.
And good question, Brian. Thanks for asking.
I would think Canada is going to be in a much smaller volume for what they're importing. But you're right, some of these containers come into Canada or come into Mexico, but are ultimately delivered into the U.S. So what we're looking at here is specifically where the destination country was Canada or Mexico.
And I'm not sure if you want to show your screen or not, Ben. I don't know what else you got on there. So
I'm just pulling a quick top number. There's not a graph or anything. Okay. Canada in 2024 was 1 million TEUs from China. And for this year, 1.04, pretty much flat. Okay. Yeah, Canada's not showing much of a change at all, but we are seeing actually a decline in Mexico, not an increase. So to answer your question, ultimately, Brian, the containers from China are going elsewhere as far as an increase. It depends on the products and the industries, of course, but we are seeing imports from China into Europe and into some Middle East and African countries grow. But for Mexico and Canada, we're not seeing that growth.
The China +1 has been more about the neighbors of China are the +1s versus Canada and Mexico. Okay. Did you have any comments on top imported growth, Ben? You mentioned India.
I think India is really the volume of the shipments here, while some of them are, like you said, more for train shipments, but others we're seeing large percentage growth, but the volume of shipments are relatively small in comparison.
For the Georgia development, that corridor development is an element of that. I think there's also a question about what's happening around the war in Ukraine and this being a thoroughfare for movement of goods around that. It's an open question, but otherwise, nothing unexpected here. But let's get into the 3 stars of 2025, the ones we wanted to talk a bit more about. So
yes, we talked a bit about India. As I mentioned, Philippines more of a transshipment hub, and as far as actual imports or exports for the Philippines, a small footprint. But Tanzania, I think, is one that we wanted to highlight on a graphic.
Yeah, especially with the Chinese relationship strengthening across Africa and Central Africa.
Yeah, when we look at precious metals being mined out of the central part of the African continent, a lot of these end up making their way to some of these coastal ports like Tanzania, where they might be brought back into China or obviously sent to other countries. So imports into Tanzania, we'll focus on first, are growing. I mean, the economy, the consumer demand, again, some of these goods might be destined for other countries in the African continent, but at least for containers coming into Tanzania, quite a bit above 2024 levels, especially when we look at week 12 was actually Liberation Day. So there was maybe a stagger there. But beginning in week 19, we start to see 2025 take off in comparison to the year before.
Yeah. Some of that movement of, or maybe the incentivizing and finding demand for Chinese goods into Africa. And speaking of that, China's export pivot, so a bit more context around that. So United States bound bookings down 8-12% versus 2024. Europe bound up 10 to 15% versus 2024. So again, seeing where it's going. Africa bound up 20-25%.
Percentage growth, definitely the largest there, but in terms of overall volume, still likely the smallest out of these 4 regions. But that is interesting to note. I'll be very curious to see how that continues into 2026, especially with some of these fast-growing economies like Tanzania. And then, of course, nearby Southeast Asia, also up 6 to 8% year on year.
And this kind of net result for China being interesting, flat to +2%. It's intriguing to see that when also looking at what their GDP targets are and what they've been hitting.
And again, that's for the entire year, keeping in mind that in recent months, Chinese exports have been down year on year. So it's evening out to relatively flat, maybe slight increase in comparison to the year before. Of course, if this trend continues into 2026, if U.S. bound bookings are continually double-digit percentages down, I wouldn't think that Chinese export volumes are going to show flat, maybe not even growth, but we might even see a decline for Chinese exports overall in 2026. That is potentially counterbalanced by increase in Europe bound bookings or Africa bound bookings, but more to tell.
All right, and I think that's about wrapping us up here.
Yeah,
we're just sending it over.
Join us again for in 2 more weeks before the holidays begin. We'll have a special guest, and we will be discussing what to look forward to and what predictions might be happening next year. But thank you all for a great 2025, for joining TradeView Live. Those of you who have been joining for multiple episodes, and we'll talk again in 2 weeks.
Cheers, everyone. Thank you.
All right.